As we are beginning with the December sessions, right? So the main objective of the sessions that we'll be hosting throughout the course of December with everyone, right? So the main objective of this is to kind of like get you in a position where you continuously work every day, which includes reading and also the Zooms as well. So majority of the things that we'll be discussing, it will be a bit of repetition. Basically, like we'll be repeating, we'll be going through certain things again as well. So this will be good as well in terms of us looking at it from a different perception or perspective, if I may put it in a more accurate manner, right? So again, the one thing that we have realized and the one thing that we have seen throughout the course of this year, right? We've seen that the market spends majority of the time in a bit of a consolidative state, right? So, and we all know that like in a situation whereby the market is continuously consolidating, the chances of us getting proper entries, they are minimal, isn't it? Is everyone following me? Is everyone following me, right? So again, everything, it's basically like consolidating. You go and look at the GBP pairs as well. We did have a bit of a consolidative state, or whereby we broke below the specific area. So we will be touching on this. So these things is that like we're going to break this down in terms of a group of pairs, right? So for example, if we're going to look at the GBP as a base currency, meaning that we're going to look at the pound pairs. So that session, we will be focusing more on the pound pairs, where we do top-down analysis on almost each and every pair that we can be able to do, right? So I've added more people so that like now, because it's December, I expect everyone to kind of like show up. So I added extra people that can be able to attend. So for example, you know, this Zoom, the one that I subscribe to, it has 100 people, it's kept at 100. So I added extra 500 as well. So I hope you guys do show up so that we can actually work together, right? So now my question right now, this is just basically like us discussing a bit of things that needs to be touched on. So what do you guys want us to touch more on in terms of the December sessions, the sessions that we'll be having throughout the course of December, right? Because it's very important that we touch on specific things, especially when it comes to top-down analysis. I realized that some people are still struggling with top-down analysis and they've been in the team for quite some time, which I know that they shouldn't be struggling with, because it's one of the easiest things to be able to analyze the market from a higher time frame to a lower time frame. It's very easy, and the bottom-up analysis as well, it's very easy, right? So we need to be able to do those things, especially going into next year. That means that the only thing that should be more of a bit of a challenge should be something that is regarded more in terms of time and executions, isn't it? So executions plays a very key important role, but again, executions without timing itself can be a bit of a problem, right? So that's why we have to consider the price to time relationship. And again, we're going to look at the things that have changed as well. For example, now when you're looking at the Hegelian dialectic model itself, it does not play well in a situation whereby there is a huge consolidative state, isn't it? But though it does plays well, but not on a lower time frame, on a higher time frame. And on a lower time frame, it's where we make executions, isn't it? So is everyone okay? Like, for example, like you have things such as this, you know, so let me just look at something like this. So you have something such as this thing, right? You have something such as this. So now one thing that you can actually see, is that we have been in a consolidation for quite some time, isn't it? So the entirety of a consolidation basically eliminates, like it basically has a specific information that it portrays within the market, but yet in the very same light, it eliminates some of the concept that we do use when it comes to approaching the market. So right, the only option that we have when it comes to this, and in terms of us analyzing it, is for us to look at this in the form of a fair value area, right? And then we have to also look at it in terms of the 3 cycles that makes up a wave, isn't it? So for example, right, so now this is just basically like us going through basic things again, just to kind of like remind you, right? So it's very important that like each and everyone knows how to count waves, which is one of the most simplest things, but yet some people still find it a bit challenging, isn't it? Are we okay? So for example, now this has been in a consolidation for quite some time. So we do understand that this is also a consolidation, which actually started from 2020 until right now. We're still in that consolidation. So now the other thing that we have to also realize is that the duration in which the market spends in a consolidation is entirely up to the market. It's not up to us. We cannot determine when the market has to break out of a consolidation. We can anticipate when the likelihood of this occurring might be. And the anticipation should be basically focused more on us making our executions based on, remember again, this also consists of a support, a resistance, and also consists of something called a control price. So we just have to kind of like look in terms of where the transfer of power is currently occurring within that specific consolidative state, isn't it? You have to exit because no, don't worry, my brother, don't worry. If you're on your way home, don't worry. This is just the intro, right? This is just the intro. Okay, that's Sonia trick. I don't know. So again, these things, they do play a very huge role, especially when it comes to analysis, right? So, and again, more importantly, is that like if you are going to make executions, let's say maybe you are going to make executions within the first quarter, right? So those executions that you'll be making within the first quarter, what's the duration in which you are supposed to hold them? Because that is also very important, right? So because now you cannot do in and out of a trade. Like, for example, if you have looked at this year entirely, you can actually realize that the positions that you actually exited, they still running, isn't it? But you cannot enter at the set market price, right? Because like you will be left holding the bag, because at the end of the day, you have to understand that like as the market continues to move, especially now when you're looking at it in terms of the market being bullish, it gets to a point whereby now there's a specific area that is dominated mostly by late buyers and also early sellers. So you have to be very careful in terms of where are you located. Because if you're located on the side whereby you're an early seller, you're going to get hit. If you are a late buyer, chances are you're going to be in a temporary profit, right? But then obviously you're going to be taken out of that specific positions, right? Are we okay with that? So those are the things that we will be touching on, all those things. So we just need to basically like formulate what we will be tackling at each point, but we're not going to discuss higher highs and higher lows. So that itself is something that we won't be doing, right? So for example, right now, if we're looking at it, right, you have to understand the fact that like now when we're looking at this from this situation, right, you do have a situation whereby like you are in a bit of a consolidation again. So now the short positions that resided from here, it's because the market tested what? The control price. Though it spiked above the control price, remember again that like as soon as the market approaches this area here, the amount of sellers overwhelming the buyers also is there, resulting in the formation of a resistance, right? Similarly occurs when you get to this area here. So now one can come and ask, what is the difference between the top and the bottom? Because now if I were to look at it, I would say that no, this is actually an excess price, isn't it? I would just look at this and say this is an excess price. So now the probability that we're going to push a bit further to the upside, it's there. So why should we actually look for a possible spike below or a break below instead of us considering a break above, right? So the other thing that we will be talking about is that, like, for example, now, if you are going to look at this in the form of it being an excess price, you have to understand the main reason why we had to have that certain situation whereby something can be perceived as an excess price, right? Remember that a spike above a specific area, which is a key area that consists of certain, I can say, like, for example, we can just basically loosely refer to it as high levels of liquidity. But in a more broader sense, liquidity is located all over. There's always a constant liquidity within the market. The only difference is that, like, now there should be a shift in that power dynamic, the shift being from buyers to sellers. And if we put it more in a more like structural format, we basically say that it will be a shift between supply and demand, isn't it? Am I everyone still following? Sean says, right? So when the market was spiking to the upside, everyone had a panic, right? So a panic, it's normal, guys. A panic is normal, isn't it? It's normal for people to panic, isn't it? Because without people panicking, then how are we going to be able to assess human behavior? But that's why, like, you get to have therapy, is it psychotherapist or psychologist? All these people that they study the mind, they do not actually study the mind of a person at rest. They study all different ways in which a person behaves in different situations. So they can come to a conclusion of like, okay, this is how people behave in these certain circumstances. For example, for one to be able to decide that the resting heart rate is 80, is it what, 80? I don't know why we just 80 BPM, beats per minute, right? This person has to have conducted a study in terms of him trying to understand, okay, this is how this person, a healthy person, this is how they are when they are at rest. This is how they are when they are exercising. This is how they are when they're doing all these activities, movement, what. So they take a set and like thorough analysis in order for them to come to a conclusion that the resting heart rate should be 80 beats per minute, because they have looked at different people and looked at different health as well, right? But this is eliminating, this is without any heart diseases or what, or maybe you understand what I mean? So you get to have that thing. So the same thing that occurs within the market is that we have to be able to study human behavior during times of chaos, isn't it? Because if you can remember, we did mention the fact that chaos is the highest form of order, isn't it? To be able to understand how humans behave in society, there must be an element of chaos. There must be an element of fear, right? Are we okay? Sharp. As far as I'm concerned, we are okay. So we still have a lot more to discuss, guys. This is just the beginning, you know, this is the beginning. It's not the beginning, the beginning, you know. So, but that's another thing that we have to also talk about, right? Just that, like, one thing that I will say is that, guys, I speak from the heart throughout each and every Zoom. You understand? So there is no set blueprint of like, this is what I'm going to say. I just let the Holy Spirit take over. If you see me, you know, not, you know, that I didn't pray with my, you know, full heart. But either way, now let's look at this thing, this situation that we have faced previously, you know, previous week, and then look at how that situation occurred. So now, if you are in South Africa, you can actually realize that the push to the upside is because of the certain, for example, it was, I think it was the Phala stuff, right? Found that the president is actually did not conduct himself in a manner that is according to the office, isn't it? So now we started seeing a huge push to the upside. We saw an aggressive push to the upside. So because now this is actually something that reflects back on the performance of a rand, right? Are we okay? So now the question now, I want to ask you something, guys. Those that are working, obviously, we have people that work here, right? So right now I'm going to refer more to graduates that are working in their line or their field, right? So you have realized that the wages itself has been kept constant, but yet the pricing of each and everything continues to increase in value, right? So we have two groups. We've got Generation Z and we've got millennials, right? So what is the common factor that Generation Z and millennial have in common? What do they have in common? Sorry, what is their common factor? Guys, I believe this is a very simple question. What is their common denomination? That's all. The common factor, the thing that they have mostly in common, right? So you do, even if you're not there, even if you're not, let's say you're not working, but you know people that work, ne? You know people that are working, ne? You know them, ne? I saw, you know, I was out there checking cars, you know, sometimes, you know, you want to see what other people are seeing, man. Like, you know, now I want to understand, because I was once in a not 9 to 5, but I was an employee, I was working. Guys, please turn off your cameras. It's very important that you do so. We know that you look lovely with your shirts off, but today it's not the time where we should be seeing It's a Monday, guys. Maybe on the 25th of January, you can come chest out. 25th of December, come chest out so we can see your lovely chest. But today, unfortunately, it's business days. You can bless us on Christmas. We don't mind. So we all know them, right? So we know people that are, you know what, hey, I went online and then I was like, you know what, let me check how much a Golf 8 cost. I was very surprised. I'm not gonna lie. I was very surprised. I was very surprised. I was very surprised. I realized that this thing actually cost an arm and a leg, guys, you know. And, you know, an arm and a leg is something that, you know, I do not wish to part with so easily, right? So like everything is overpriced, right? But the thing about people is that like they do not actually get a chance to listen to other people's perception in terms of like, okay, guys, do not do these things. Do not take unnecessary debt, right? So out of all those things that are overpriced, so we know that majority of the people have debts, right? And one of the things that millennials and Generation Z do in order to keep up with the lifestyle is what? Credit card debt, isn't it? Right? You guys know it, credit card debt, ne? So credit card debt. So do you guys know that like majority of the banks, they actually like they had to make like non-recoverable debts, right? Because the thing is that like majority of generational Z and millennials, they are unable to pay their debts, right? So what occurs when majority of people default on their payments in terms of their loans, their credit card debts, what occurs to the state of the economy, right? Because one thing that we understand is that like the Reserve Bank increasing the repo rate, that is going to have a huge impact to new homeowners and actually pre-existing homeowners. So how is that going to have an impact in South Africa next year? Is that going to result in an increase in the value of a rent? Or I mean, like the strengthening in the value of the rent, is that going to reduce the value of the rent, or is that insignificant within the equation? Or are they going to cook the books the same way that we have seen the US cooking the books when they produce their consumer price index, whereby they failed to mention the fact that, no, listen, they failed to mention the fact that they omitted the gas prices, they omitted petrol prices, they omitted mortgage, they omitted all things that were important, right? They omitted the fact that the food is more expensive, right? But we do have something that can be a bit of a, kind of like provide a bit of stability within the market, right? So you guys realize that during this World Cup, we actually saw Qatar and China signing a 27-year deal, isn't it, on LSG gas? You guys understand that, right? So that means that the only thing that we have that can sustain the dollar right now is that can sustain the rent right now is to see the dollar weakening in value. That may give the outcome that the rent is stronger, but yet it is not strong, right? It's just because its base currency is weakening. So when the base currency weakens, now we do have something that can, you know, the measurement as well gets reduced. We're no longer exchanging it at that 17 rands per dollar. We're no longer doing that, isn't it? So this is one of the things that we need to see as going on, especially next year. So next year, we'll be looking at the first quarter, towards the end of the first quarter, beginning of the second quarter. So this is when we'll be monitoring, can we actually see the reduction in the value of the dollar, which is overpriced even by now, isn't it? So those things are things that we going to look at. Those are the things that we're going to plan for, especially next year. That means that the beginning of the year, it's going to be very very much important in terms of us positioning ourselves in a manner where we can actually execute trade and then hold those trades for quite some time, isn't it? Are we okay? Are we okay? Guys, are we okay? But like one thing I will tell you is that like if you don't have debt, don't go get them. I think you're happy now. If you don't have debt, guys, I think you should go and don't have one. If you don't have debt, don't have them. Don't create any debt. Don't buy anything. Next day is going to be a bumpy road for everyone. So do not add unnecessary things that are going to take away money from your account, isn't it? Or from your household. So right now, again, like as we were looking at the rent, right? The push to the upside is basically a reaction in terms of the things that were occurring. Please do not think that this is a double bottom. It has nothing to do with the double bottom. Though we have been consolidating, a deeper push to the upside, it was required, isn't it? So, but another thing is that like for us to be able to position ourselves in a manner where we can actually profit from this whole situation, right, is to actually look for possible shorting opportunities roughly around this area here. So this is something that we'll be looking forward to. I think like somewhere around here can give us a possible shorting opportunities, right? So now the question I will ask you that is very simple. Why consider short positions at that level? Why can't I consider short positions at a different level? Why can't I consider short positions above this area? Why can't I expect the market to spike above 18 rand 50 cent and then actually spike a bit further to the upside? And if it does spike a bit further to the upside, what then? Because everyone needs to have a contingency plan, isn't it? Call it plan B, you know, guys. It's December, you know, we're going to need facilities. I know you guys are up and downs. It's not right, but plan B is required, you know, not necessarily like plan B in terms of life, but you know, you have to have something, a contingency plan, you know. That is something that is going to be very important, especially when it comes to the rent, isn't it? So for example, let's say that like we do get a possible spike above this area here. What does that mean? We have people on monthly influxing sell orders on account of double top. Possible continuation of a rally, removal of the floating supply. Okay, now you see Mr. Shoga has been paying attention in class, guys, you know. So again, the removal of the floating supply is a necessity, isn't it? But again, remember that the removal of the floating supply did occur initially. This was the removal of the floating supply. Actually, if we were to look at it in the most simplest form, right, we can actually see that the removal of the floating supply, exactly, you see, at this level here. Once you tap above, already when you tap above 50%, right, Fibonacci retracement level, already you tip the scale, you are already in the, you know, you're in the supply level. So you are at an area whereby it's dominated by suppliers, isn't it? So, but again, remember that like the only way you can actually force suppliers to reduce their pricing, it's for them to compete amongst one another. And the competition among suppliers normally occurs in terms of pricing, because one supplier will decide, you know what, means while everyone is selling this at 18 rand, let me reduce my pricing and sell it at 17 rand, just lower than my competitors, right? And then the very same person realizes that like, okay, this one is actually generating more sales, right? Let me put it below that, isn't it? For example, right now I can say that like, so let's say, for example, right now, we actually saw supply and demand occurring in real life, isn't it? You guys remember when Cyril Ramaphosa said, oh, I'm going to give everyone 350 rand grant, isn't it? Everyone remembers that, right? I'm not the only one who remembers that, guys. Though I haven't benefited from it and I still want my 350. I'm not satisfied. But everyone remembers that, right? You know, this is the thing that I like about economics. It's an everyday thing. So everyone remembers the time whereby Cyril Ramaphosa said that we're going to give people 350, right? Everyone was getting 350, right? So now when you had your Forex cost priced at 3,000, your competitor is pricing it at 350. What occurs? Your competitor is driving sales. You know, you guys are in the same field. You're selling the cost. So your competitor is driving sales 350, 350, 350. So you realize that the 350, it's, you know, all those people that were willing to pay 3,000 because you and this person are basically on the same platform. You know, you are known as maybe NASDAQ traders, what traders, but you are on the same level. But here he reduced the price. You understand? Once you reduce the price, you increase the demand, right? So when you keep your prices steadily at 3,000, you're no longer getting consumers. The consumers are going to cheaper prices. They have an alternative, cheaper prices, right? So you are forced to actually reduce it to 350 so that you can match your competitors. You understand? Then someone comes and say that it's $10. That's like 150 rand. This guy is undercutting you bad. He's undercutting you bad. So you are forced to go $8 until you get to a point whereby the cost is like $1. So, but you understand, and the more you reduce the price, this is the thing that I like about economics, right? The more a supplier reduces the price, right, the more likely he's going to go out of business. Because now, if indeed you are operating at a position whereby you are selling, let's say you're selling goods. I don't know, you're selling something, right? So when you're selling that specific thing, let's say maybe you're selling a phone. At the end of the day, the thing that has to occur is that like the pricing itself of that specific asset must be greater than the cost you incur, like the cost you incur. The cost that you accumulate while trying to acquire the said asset. The pricing must always be above. Rather you break even on operational cost, everything, but break even. But if it goes below, it means you're going, you understand? So those are the things that you need to also take, right? So that's why right now, when you see a certain thing continue to reduce in value, you get to realize that like, oh, now this thing is reducing in value, the suppliers are gone, you know. That's something that I like. It's actually very nice, right? So the more you reduce the price, though you may increase demand, you're going to run out of suppliers, isn't it? That's why you get price competition, right? So when the suppliers have reduced, now there's only few suppliers, but the quantity demanded has increased. Therefore, that said asset itself starts to increase in value until it gets to a point whereby it's at equilibrium. The amount of suppliers and the amount of quantities supplied and the amount of quantities consumed are at equilibrium. Now you've got a set even supply and demand. That's where you get to reach equilibrium, right? And then now the suppliers, because they start feeling greedy, what do? They continue to increase the price. Then now people cannot buy at those positions. This is the nice thing about economics, isn't it? Kind of like tells you like, oh, this is how things are. But hey, enough about that. Let's get to the charts, guys. I know you guys are waiting for me to say buy here and sell here, but either way, we move. So the other things that can kind of like contribute next year, especially when it comes to this situation, right? So probabilities of us seeing a lower pricing in terms of the oil, they are there, because at the end of the day, the rise in the interest rates itself, it's used to fight the rise in the value of oil, right? So as we continue to fight oil, not we, as the US continuously try to reduce the value of oil, the more the relationship between them and the oil producers are going to be very much impacted. For example, the OPEC is made up of people. The USA, they even name them the cartels, right? And the thing is that like the US oil itself, because it's not backed up by anything, it's very vulnerable, especially when people are pulling away from it, right? Look at the Saudi itself planning that. Qatar seems like it's way ahead of that. So they are doing all these things, you know. So the question is that, like, how long can the dollar itself be sustained at that particular level? So if we can end up seeing that occurring, the dollar reducing in value, therefore the amount of gold that can be consumed now starts to shift a bit. Isn't it? The amount of gold, let's say maybe that again, per ounce. So you are able to accumulate more as compared to previously, isn't it? Because it will be priced at a cheaper pricing, right? So this does not necessarily mean that the dollar itself, the gold itself will be reducing in value based on the fact that the dollar is increasing in strength or reducing in strength or whatever. No, it basically means that, like, now the said asset is priced at a cheaper price based on the exchange, right? So now giving people an opportunity for them to buy more quantity of it. Langwisha, you guys understand where I'm going with this? So right now we're just doing touch-up, guys. Do not worry about many things. Do not worry about many things. We're doing touch-ups. We're doing touch-ups. So now, obviously we're going to need a bit of volatile situations, right? So because again, if we are looking at this entire area in its most complete form, in its entirety, right? So we have a clear understanding that this itself can be regarded as a what? As a consolidative state, isn't it? It can be regarded as a consolidative state. And if itself, it is regarded as a consolidative state. Now, what does this mean about the future of the gold? Can we expect gold to continue rallying the following year? Can we expect a drop in price? And if we're expecting a drop in price, why? If we're expecting a rally, why? Very fascinating, isn't it? It's an interesting concept. It's very nice, ne? You know, that's very nice, ne? Guys, in a room filled with spectators, you know, my biggest thing, the thing that I don't like, it's a person who acts as a spectator. You guys are adult here. We're going into 2023. No games. I don't want games. I don't want nothing. I want a solid focus. Next year is your color, you know. Next is going to be, but guys, like, we in this together. Like, you have a supporting team, you have a supporting group. The only thing that we require is for you to put in work. That's all. We don't even need you to, you don't need to do TikTok dances. You don't have to do nothing. All you have to do is just consume and come with other methods. It's very nice to see someone sharing different approaches within the team. But again, remember, even if you share a chart, you must consistently explain. This thing of you just sending a naked chart in there and be like, guys, this is my thought on this pair. It does not work. You must explain your thoughts to your teammates so that they can see how you came to that conclusion. If we see a decline in USD pairs, then we see a decline in gold. How so? Refer relationship. So we expect the rise in the value of euro. Nagina go refer relationship. The spike below tested a demand zone, resulting onto an aggressive push to that. The spike below, no, like, okay, Sean. The one thing that I want you to understand, ne? Guys, supply and demand, it is there. You know, if we were to look at supply and demand in the form of 100, this is it. Let's just look at it in this form. This is supply and demand, ne? Let's look at it as 100, right? Let's look at this as 100. That means we've got 100 people. We do not have more nor less. Because I want you to understand that supply itself, it's constant. Let's put it this way. Let's look at supply and demand, or the concept of people participating within the market. Let's look at it as a constant thing. Langwisha. I want us to look at it as a constant thing. Like, it's constant. It's 100. Ne? Look at it from that perception. if we're looking at supply and demand as tug of war cannot have 5 people this side, 7 people that side. No, we have to have 5 people this side, 5 people that side, right? He who has the strength, he will win. So now let's look at it from this section. From here to here, right? From here to here. From here to there. Language. From there to there, it's an equal distance, isn't it? Meaning that at the top, there's buyers. At the bottom, there's sellers. I mean, like at the top, it's sellers. At the bottom is, like, let's just look at it for however you want to look at it. Supply at the top, demand at the bottom, right? The tug of war is won between the point of equilibrium. That means he who tips the scale first, the one who falls into the hole first or crosses the line first, automatically shows. Okay, you guys understand where I'm coming with this. For example, tug of war that was meant between, the tug of war that was actually created between 2 individuals. For example, a clear example is Squid Games. Squid Games showed a clear example of tug of war, whereby it shows that each section consists of equal people. Those with technique ended up doing the things, you know. And if you can look at the illustration of that, right? Once as those set individuals are approaching a line where they are about to fall, the first one already gave up because he just sees like, this is it, I'm going to die. So that means that like the fear itself is an embodiment between supply and demand. Therefore, if we can actually say that the fear, it's one of the most important factors that play a role between the equilibrium scales being tipped. Languisha. So therefore, we understand that supply and demand itself, they are constant. Okay, there are 2 variables, right? So the third variable must come within the market that's going to impose fear in each field, either or. Whether it's going to impose fear on the sellers or whether it's going to impose fear on the buyers. But we need a third factor to come and disrupt. You understand? You guys get me, or I'm just rambling like a madman? This is a clear example that I can give by far now in terms of this relationship. So I want you guys, whenever you look at it, don't say, hey, the buyers, hey, they came, they spiked us, they did what? No, look at it in its most simplest form. It's a tug of war between 5 and 5. The 5 and 5, it's 2 variables, team A and team B. The one thing that you need in the middle, it's fear. No, that one, that one has more muscles. He might pull. That one is buffed. That one goes to the gym, very active, 24/7. That self, it's fear. It instills fear upon the opponent. So now, if we're doing tug of war, I see someone there, that side, even I just have long arms, no bicep, no tricep, or what? It's just a long arm. Automatically, my mind is conditioned for me to lose. I'm going to lose at this thing. So now the very same principle when applied in terms of a supply and demand is that once the market gets into this area here, right? What occurs? So once it gets to 50%, right now it's a tug of war, right? And remember that in a tug of war, one who feels like they're already in charge, they start to settle, they start to relax, no, we want this thing. So let's say maybe the tug of war moved from this area here, pushing price to the downside. So now let's say that this area here is pulling the price. We're pulling it. We want it back. We're pulling it. We want it below this level. So once it gets to this level, this person itself feels like they already won the race. So this one, with realization that he's about to lose, what does he do? He pulls because this one is relaxed. This one sees this thing is going away from me. Just if we're looking at it in terms of tug of war, guys, that means that the element here, it was fear. You understand? So, but once you tip the equilibrium scale, now it becomes a different scenario. But we'll tap more onto that as time continues to progress. But right now, let's say that we're looking at it from that area. So the main objective of this discussion is just to let you know that, like, do not look at this in terms of like, hey, they're spiking, hey, they're reversing, hey, they hit. Remember that the market is in constant tug of war between supply and demand, always. Right? Okay. Now, with that being said, as we continue and push a bit further throughout this session, right? Now we can look at it in its simplicity, right? So again, remember that like a break below a specific key area itself, it does consist of several things, right? Remember that like right now, the time and the duration in which the market spends in a consolidation does determines the duration in which the market is going to, like it actually determines the length of the breakout, isn't it? So the more time spent, the more time a set market spent in a certain consolidative state, the more intense the breakout is going to be, right? So with that being said, why wasn't the breakout at this area intense? Why did it lack intensity? Very nice. Guys, true, Byron, true. It's a constant tug of war. That's why, like, when it comes to the market, each and every position, you can decide to buy or sell. Right now, you can decide to go on gold and just sell it and decide to buy it. But at the end of the day, there is going to be factors that are going to impact you. For example, let's say maybe within a macro supply and demand, there is a micro supply and demand. Can we put it in that manner? Very nice stuff, né? Sean, true. Market didn't spend too much time in consolidation. For example, this was quite a duration in terms of consolidative state. And you know, the thing that I like about this consolidation, it's different, right? So the consolidation itself, it's far different from the other consolidative states that we have had previously, right? Because this one consisted of small candlesticks, right? Consisted of smaller candlesticks, which basically reflected a high degree of liquidity, isn't it? That means that there's constant competition over price. Nangwisha. For those that don't speak my language, langushisha meaning that you guys understand. Are we okay? Basically, it's an amazing language, guys. The language that I speak, it's the language of the gods. It's in the heavenly places. Yeah. When you're there at UK, tell them that you know someone who speaks Sepedi, the language of don't say Northern Soto, Southern Soto, anything. Sepedi. Yeah, they will understand. Like, I know you are among the righteous. Okay. So now, if we're going to look at it from this area, right? So we understand that basically this area compared to that one, there's a huge difference, right? Because here there's constant competition over price, right? Even here, there's constant competition over price, right? So, but like right now, obviously, what we will be looking forward to is having a bit of a deeper push to the upside. So we will be looking to take potential shorting opportunities at this level, which will also have we have a bit of a confluence, right? Have a bit of a confluence with the, we cannot say specifically that we're going to look at 50%, right? But we're going to look more around like 61.8 Fibonacci retracement level, right? Remember again, the way we use the Fibonacci retracement tool, we do not use them in the form of us focusing more on the set pricing, or maybe more on the fact that this is a Fibonacci retracement tool. At the end of the day, the Fibonacci retracement tool, for us to be able to draw it, it required historical data, right? But it's more in terms of like us focusing more on the relationship between supply and demand itself, right? So because we understand that above 50%, it's us tipping the equilibrium scale, and therefore we have more power in terms of, we add more power in terms of the suppliers. So now you've got an influx or an increase in the amount of suppliers as compared to consumers. Therefore, their suppliers themselves are forced to reduce the pricing in order for them to get their, get the clients. You guys understand? So basically what we will say is that, like, here, this is before COVID, right? This is before COVID. So here is before COVID. Above this area here, that's when Ramaphosa came into the mix. And then as the price continues to increase, Ramaphosa introduced 350 here. So now the suppliers themselves here, there is someone who's undercutting them, you see, who's reducing their pricing back into this area here. So now as the price continues to reduce in value, now they get their cost bought. Let's put it that way in a simple term. I hope you guys will remember it. So just know that above 50% is when it is introduced as a pandemic. Once the market goes above 50%, know that Ramaphosa is about to add the 350. So the suppliers, they have to reduce their pricing so that they can get their orders matched. Ne? Are we okay? If you forget it in this way, I don't know. Because like I'm using Lehman's method in order to simplify things. Lehman's approach. So right now, as you can see, like where we're currently residing, so this area here will definitely provide good areas for us to consider taking short positions, So we just have to be a bit more patient as well, because like at the end of the day, there's legitimately nothing you can do unless if you do get a deeper push to the downside, then, hey guys, me and lightning are not friends, guys. I come from the pits. Oh, so let's say maybe that we do get a reduction in the value of gold, right? So if we do get a reduction in the value of gold, this will probably be an area for us to consider taking long positions, right? So with that being said, the reduction in the value of gold itself, once it gets to this level here, now, let's say that it gets to this level before the end of the year. Oh, I think it can get before the end of the year, because I think on the 13th or the 14th, we've got the interest rates, right? Let's say that the interest rates were hiked, and then we get a spike to the downside into this area here. So what we will be looking forward to is a move out of this area before the end of the year. Therefore, meaning that the next year, when the year, like the new year opens, when we have the market starts moving on New Year's Eve 2023, what we will be looking forward to is a further push in the price to the upside, right? But with the intent of us breaking the yearly low. That means the previous year's low. We need to break the previous year's low depending on where we are. So if we are still trending around this area by the time whereby the market, whereby the new year comes, the new year candlestick comes, that means that now this gives us at least an opportunity for us to see the market pushing a bit further to the upside, provided that initially it was closer to the yearly low than it was to the yearly high. Then with that being said, now that itself gives you at least an opportunity for you to expect a rise in the value of gold with the intent to break below the yearly low, as it was closer to the yearly low than it was to the yearly high. Langwisha, was that? I hope you guys followed through. Okay, so if that is the set case, then that's what we'll be looking forward to, isn't it? So it's what we'll be looking forward to. So these are the things that we will be discussing throughout the course of December. So with that being said, that is that like we have to continuously study so that like there is a foundation whereby each and everything we're going to discuss, it's going to settle on. So meaning that the foundation must be deep now. If you were not building a proper foundation, make sure that everything is just proper so that what we build on can actually sit properly, you know, because like, you know, those abandoned buildings in China where they create and then they say, oh, these are not livable, then they leave things as they are. We don't want that. We want a steady foundation so that when we erect the walls are perfectly, you know, solid, so that when we start roofing and everything's just proper, you know. But like, again, now this is just the basically what we'll be looking forward to. So now we just want to see the market being at least at this area here, because it's going to give us an opportunity for us to buy it, right? And again, the thing is that, like, remember again, like, everything is force, isn't it? Language, everything is force. Everything is force, everything is energy required, you know. So the amount of force that was required for us to break above 1726 or 1720, that's quite extensive, isn't it? That was quite, you know, that was some serious force, isn't it? So now when you get to 1800, now that becomes a bit of a challenge for you to break that level there, right? Because the amount of force you used was spent breaking above 1720. So now you are at that area. That means that the amount of force that you will need to generate in order for you to break above that area should be at least a bit intense. So that means that we can expect the same intensity as here, but like from this level here. So we can actually expect a bit of a replica from this area here. So that will probably be something that is very nice to observe. Let's say maybe something from this, you see. If we can get something like that, that means that we can actually expect something like this, right? Maybe with a bit of this. You know, with some depth, you know, if you can get something like this with some depth, therefore it kind of like creates a bit of a consolidative state that will give you at least an opportunity for you to realize this occurring. Are we okay? Or even this, we can actually even end up having this case here. Right? We can end up having this case here. I know that you're looking at it as a head and shoulder pattern, but let's not go there. Let's look at it from this area here. But yo, man, it's going to be very nice to observe, guys. Those that have managed to come and participate with us, thank you guys for showing up. And those that haven't came to the session, we'll see. And make sure that, guys, you change your naming to your real name, guys, because we cannot be playing this many games. Next week I'll be taking register, so we're not playing too many games, right? So I hope everyone has a lovely day. As it stands, the December sessions for us as a team, they have started. For those that are able to join us, welcome. For those that are unable to join us, okay. And then throughout the course of December, let's continue working. I will try to do more afternoon Zooms because I understand that people are working and I want everyone to kind of like be there. So if I'm tired, you guys you'll see I'm still tired right now. I just took a shot of espresso. That's why the energy. But yeah, guys, let's continue working, guys. Let's continue doing that. It's very, very important that we do that consistently. So thank you, guys. Shout out.